Balasubramanian, Chief Executive Officer with Birla Sun Life Mutual Fund, joins us. Bala, good to have you back on ET Now. Thank you for joining us. Bala, what is your sense? After 5 years of a long wait, is there a bend in the road? Has the new bull market started for India?
I think the way I think it's now is currently shaping up is, as you rightly said, the last 5 years of dull period what we have witnessed in equity. Definitely I think is now is making people believe that more or less his bottom is made with respect to the economic growth being very somewhat muted for long. And second is an overall industrial production numbers has also been somewhat low for quite some times. Also now seen the bottom. And top of it, I think this quarter, I think beginning of the quarter, if you look at it, most of the corporates, whichever has announced actually results so far, they have not actually announced results which is actually worse than what the market has been expecting. Actually, they have done better than what the analysts have been predicting. And so there's a combination of multiple things I think is now bringing back the high level of participation in equity. And now it actually is formed a new high. But I think one has to also remember the fact that the last 5 years, if you look at actually on a point-to-point basis, the more or less index has been moving in the range of about 17,000, 21,000 index. And that's hence I think some feeling is now is coming that now is reached a level which is of course creating a new high. And clearly from the broader point of view, I think the direction is somewhat setting in clear, both in terms of international economy, rather global economy is getting somewhat better. And second is domestic economy, as I mentioned earlier, that when the bottom is, actually is believed that this bottom is made, and clearly I think we can look for an uptick in the overall economy, which also has to reflect on the corporate earnings, higher level of participation and so on and so forth. And that's why I think it makes us believe that an overall equity market outlook is changing for better compared to what we have seen in the last 5 years. Probably one may also be even surprised the way I think the pullback is coming, the way I think the money is being pumped in from global investors. There is a clear case actually for the Indian market to do better even going forward, supported by reasonably good potential recovery that could be seen actually in the economy as a whole.
Bala, what's the sense that you're getting in the near term though? Does it seem like the market could get a little toppish because we're pretty much sitting at lifetime highs, at least for the Nifty and the Sensex?
I think it's a little bit of a tricky. I think if you look at the whole move of the market the recent past, largely driven by the larger participation that has come from FIIs. Almost on a continuous basis, FIIs have remained a net buyer in the market. And we have hardly seen any participation that is coming from the domestic institutional investors, including mutual funds and insurance companies, and so on and so forth. And which in my belief is, I think we will probably see the increased level of participation coming from the domestic as well as we move forward. Second is, if you look at actually some of the headwinds that is expected in the next few months, I think nobody would like to actually take a chance in terms of to predicting what could be the potential outcome with respect to the state election result. And they'll also in some sense actually keep the people, keep actually the investors a bit guessing in terms of what to do actually in terms of equity. So which essentially means that increased level of appetite that could get generated for equity, given the fact that some of this outcome may potentially be a big driver for the equity level participations coming from overseas investors. So if we look at it from that angle, probably we cannot, it's too early to come to a conclusion that market is toppish. There is no doubt that the run has been pretty large. At the same time, if even today also if you look at it, the gap between the, in terms of valuations, between the large cap and mid cap and small cap is pretty large actually. It's still the valuation is, the gap is very large. And if you actually deep dive in terms of analyzing some of the companies more closely, that asset price revaluations, I think it's still relatively cheaper. As I think is it being expected that some of the norms with respect to the NPA recognitions as well as some of the reforms that could potentially come on the way of power sectors for them to actually do better. So these are some of these positive expectations on various sectors could also have some bit of rub-off effect on the upper side.
Bala, right now the feel-good factor is back. Liquidity signals are blowing strong. But at a time when we are pitted against state elections, followed by the debt issue in Feb for US, then our own general elections in May, Do you think it's somewhere too early to make a case for a straight line appreciation?
I think the way to look at it is, I'll take the last point first, which is the tapering effect. I think clearly, if you look at the last two policies, is actually in some sense preparing ourselves for any kind of potential tapering that could come in US. The very fact that the repo rates have gone up by 50 basis points and the long-term interest rates, despite all the things being there, the long-term interest rates continues to remain high. So all these things is actually in some sense in reflection of our preparation actually for potential tapering that could happen in the US market. That's one. And second is, given the fact that there is a need to address the whole issue of interest rates regime, and also as an attempt actually to increase the credit offtake from the banking industry, I would assume as we move forward with the somewhat stable, less volatile interest rate regime that we are currently witnessing in the short end of the yield curve, and I'm seeing short end of the yield curve 1 to 5 years, the rates are somewhat low, and that essentially means the liquidity is good, money is being made available from the banking system for corporates, which also lead to actually the corporate credit growth I think picking up the second half. See, this combination put together, we would only expect the fundamentals of the companies, as we have seen in the past, is getting actually better. The confidence for companies would also eventually somewhat look better. And on top of it, as you rightly mentioned, that some of the outcomes towards the election, both the state elections as well as general elections, in many sense, I think there could be some expectation that could get built around that what could be the potential change in the economy that can be witnessed post the elections are getting over, which essentially means that can this be actually towards betterment in terms of the economic growth coming back. I think the probability of that seems to be, if it remains a little high, then we could probably see actually the equity market surprise on the positive side.
Bala, are you liking the PSU banking space, which off late has been doing pretty well?
Yeah, I think again it's a question of one is of course the valuation, and second is what could potentially come around the NPA recognition norms. There has been some bit of expectation. There has been some bit of what I would suggest the discussions which is around the differentiating between the infrastructure companies which is meant for creating a public utility and the infrastructure companies which is meant for their own profit purpose. Assuming they are able to actually bring in some kind of differentiations around the recognition of NPAs within the banking systems, I've been one of the biggest funder actually of the system in the last 4 or 5 years, especially in the public sector space. Then there is some bit of probability that these mid-size public sector banks could actually get re-rated. That's one. And second is the government also has been recognizing the fact that some of the banks have to get capitalized if they have to go to the next level of growth in terms of lending more credit to the companies as well as the needs of the economy, which essentially means that the government of India is also supporting the banks in terms of capitalizing them. So these are the two factors I think I would assume that would have an impact on the PSU bank space to get somewhat re-rated. But ultimately I think the re-rating can always happen only up to an extent. Beyond that, it has to be combined with the fundamentals of these banks getting better in terms of quality of loan getting better. Second is the cost of borrowing is getting better. At the same time, is able to maintain the margins relatively better than what they have done in the last few quarters.
So Bala, how does one participate in this kind of a market where fundamentals are still looking weak, liquidity is strong, and mid-cap is where the real action is?
I think the one way to participate is, which we have been actually saying for quite some time, the equity market can always give a return in one go. When I mean one go, the last 5 years there is no doubt the equity investors have not made money. And given the fact that the equity market also gets, in some sense, get the positive rise pretty fast and start discounting in the prices, both in terms of large cap as well as in small and mid cap space. And clearly I think first and foremost thing which I think every need to adapt is actually staying invested in the market with some of passions, and the return comes in one go. That is one. And second is, given the fact that the last year or so, there has been a significant outperformance that has come in the broad level of index, both in Sensex as well as Nifty, given the fact that large pool of ETF flow that has come only in the large cap companies. actually it has left behind the mid-sized companies and small-sized companies with the significant undervaluations in the sectors. There's one way to actually look at that, an expectation of re-rating that could happen in the mid and small-sized companies is to participate through the mid-cap portfolios as well as smaller mid-cap portfolios could be another options. The third, of course, is I think India has started the whole bull story in the year 2007-2008 as a big turnaround coming up on the infrastructure space. And post that, we have never seen actually the infrastructure companies to give any return actually to the investors. And having now invested a huge amount of capital in the business, then having actually built reasonably good infrastructures, whether it is in the road or port or airport, and those companies have never got re-rating, given the fact that it's high capital intensive sectors. And also given the fact that we are at a time where we may probably see some kind of positive twist coming from the policies, as well as the companies also realize the fact that they need to manage the capital much better in order to generate return for the shareholders. We may probably see some bit of re-rating coming even in the infrastructure space. And it is also coming from the fact that if one analyzes the companies in the large cap names within the infrastructure space, their level of order book position is relatively better, and they do have got reasonably good orders in the last 6 months to a year or so. So all these things in some sense reflects that as we move forward, the sectors which has underperformed, especially in the infrastructure space, we could see actually the re-rating coming back, and that potentially can generate return for the investors.
Right, Bala, appreciate your time, and once again wish you a very happy Diwali and a very prosperous year ahead.